9/9/2024. Here we go, folks. Unofficial end of summer. This week's biggest story. Yep, you guessed it. It's not the lack of earnings or the last few companies reporting earnings this week, like GameStop. It's not the big event that's happening at the beginning of the week with Apple. It is the upcoming presidential debate. So what's going on here? I think the markets have a bit of jitteriness in this upcoming debate right now because there is no clear front runner. Okay, you look at the right side of the screen, Trump's ahead. If you look at the left side of the screen, Vice President Harris is ahead. But when you put all this stuff together and you factor it down, it is a horse race. And we need to see some clear breakout one way or another for the markets to break out one way or another. We've just seen a lot of volatility, and it's happening even today too. So we're going to go into where we see the markets going, and what I'm doing is I'm going to present charts to you today that talk about. I'm adding in seasonality and trend. Here's what I'm talking about. So as we come into this week, and we're in the middle, we're turning into the middle of September. The S&P has got resistance right now from that dotted line you see right up here, which is around 566. All right, we came very close to that at the beginning of September. We've dropped down below this fork, which I've shown here. And so this is a fork where we're looking at a low to a high to a low. Now, that low comes all the way down with the bar chart. But if we were to look at it on a close by close, it'd be a little bit tighter. All right, where are we at right now? We're in a pullback phase. We've got a little bit higher bump as of this morning, Monday morning. And where do we go from here? Well, I've got some red in the screen. So what I did was I went into the money calendar and I painted a picture for the S&P. And we've been painting a picture of, well, if you look short term, the month of September is all red. And if you look long term, the month of September going forward is green. I took a scatter chart of both. And it's basically saying that the most volatile part of September really is these first couple of weeks. And now that we're into a full week of September, we'll be able to see what I believe will be where we're going to run into, I think, more of the end of volatility as we run through to the mid part of September. Maybe around the 18th, things will start to turn a little less volatile. Going forward, looking farther out, there's a lot of green on the screen because for much of the last 10 years, the market has run up from that middle to end of September. Now, last year, it didn't happen till the end of October, but I'm blending in everything for the last 10 years. Our targets still look like 580. Seasonals turn bullish. If they don't turn bullish in the next couple of weeks, they should turn bullish in the next month. We've also got the Fed. Looks like it's starting to be on our side. Let's look at the next chart, which is TLT. So TLT is showing us also that it is moving higher, which means that the projection for interest rates are lower. This is what's interesting about TLT. We're coming up upon year-to-date resistance, which is really the end of last year was the last time that TLT saw anything that was north of 100. Since then, we've come down as low as 87.50. We've started a run since the end of April, which is taking us to 90, almost 99.5. We're very close to that 101 area of resistance. But guess what we're doing? We're running into some volatility here for the next, call it month, maybe to 6 weeks. After that, then we start to snap back and the bond market gets bullish. So this is interesting that the bond market is telling us that we could see some pullback, maybe some sideways instead of pullback. But right now, seasonality is against the bonds for the next several weeks. We do have rate cuts coming. Maybe they come at the end of September, and this turns quicker than the seasonals suggest. But again, the long term, looking out toward the end of the year, we see higher highs for TLT. USO has been trending down. This is an interesting chart too. The summer is ending. Our short-term seasonals, however, for the next few weeks look to be up. That makes sense because we've had a heck of a sell-off here. In fact, the oil market's down about 10% just in the last call it 2 to 3 weeks. And so to get a little bit of snapback wouldn't be the worst thing. So if we did get a snapback, we would see, that 4 wave come in if we were looking at Elliott waves, and then the 5th wave would take us lower. Long term, we still see trends down, both seasonally and, of course, looking at the trend itself. How about gold? Gold continues to be strong as we head into the election, but it too is going to run into a little bit of weak seasonality here. Looking at the money calendar for GLD, going out to around mid to end September, it does show some weak seasonality, but then that will turn bullish as we get towards the end of September. We got a 220 level of support right now for GLD. The target is still remaining at 250. All right, finally, let's talk about the VIX. So the VIX, this is a yearly chart of the VIX. Hey, one thing in common that I've shown you with all of these charts, they're all line on close charts. They're not bar charts. I thought what I'd do is I would take out the wicks and I'd simply look at close to close to close and run that as a line. When I run it as a line for the VIX, quite a big difference, because we had this spike in the VIX back in August. It took us all the way up into the 60s. Well, that close was up there in around the mid 20s is where we closed that out at. Right? From there, we came back down to 15. We double bottomed here at 15 for the month of August. Look what's happened just in the last week or two. We've ran back up from 15 up into the low 20s. That's our current levels. The closed VIX highs are around 25. Closed VIX lows are near 12. Where are we at right now? We are higher. So on a close by close basis, options are, and this is for the stocks that are within the S&P 500. Options are on the high side. They are expensive, right? This has been good for option buyers. It's been bad for option sellers. But again, we're running into that month of volatility. That month of volatility seasonally should end and bring option prices back to some kind of mean average, which would take us back down to around 1750 based on the chart we see here. Takeaways: stocks are pulling back from their all-time highs. We've seen that happen here in the last week or two. Bonds are higher, and not only bonds, but gold also, strong ETFs for the week. And the VIX is closing on the high side as our Q2 earnings are ending. We'll pick up Q3 again as we move into the month of October.